Michael, are you going to start the broadcast or shall I
I
start?
did.
Thomas.
I just did.
Oh, okay, all right. Okay.
Hello. Good morning and good afternoon or good evening, depending where you are. It is a distinct pleasure and honor for me to moderate this conversation. It's a fireside chat. There is no fire next to me or anybody else's, but this is a conversation with two of my close collaborators on the significance of the African fintech space and its implication to both of the continent and to the world. I'm going to be very brief. I'm going to be playing a moderator role. My name is Tomas Debas. I am the head of global partnerships at the U.S. Department of State, which essentially means that we focus exclusively on engaging the private sector and advancing our development objectives and our foreign policy around the world. And entrepreneurship is a key pillar upon many, which the U.S. obviously has a significant lead in the world in terms of addressing economic, social, and other issues. And I'm not going to lecture you. Most of you who are attending this conversation know a lot about startups. They are a key engine in both economic growth, economic recovery, and resilience, especially now in the midst of a pandemic. And what will happen once the pandemic kind of gets addressed? Startups are going to play an oversized role in bringing up with new business models, new solutions, and new innovations. So we are a true believers when it comes to startups, and we're very excited about that. And you might be asking the question, why does the U.S. Department of State cares about this? And I'll tell you, about 10 years ago, I think it was June 2010, McKinsey released a landmark report called Lions on the Move, which was widely read. It basically kind of outlined and showcased why Africa is the future. They talked about how 7 out of the 10 countries around the world are growing in Africa. And they talked about both the demographic and the economic underpinning of why Africa is going to be the way of the future. And we read that, obviously, and we became kind of a true believer of that narrative. And earlier on, we put together, I had the pleasure of leading that effort, a partnership called Lions. We call it Lions because of the report, Lions Africa, which is kind of a Startup Africa initiative. We launched it at WEF Africa in Addis, and I think it was in 2012 at that point. And with Microsoft, Nokia, the African Development Bank, the World Bank, and a very iconic pitching platform called Demo in Silicon Valley. And we kind of brought Demo Africa to the continent. And I remember being on the stage in October 2012, if I recall, in Silicon Valley at Demo. I was there basically representing the department and talking about why Africa mattered. And so I made this kind of impassioned case for why the U.S. ecosystem needs to focus on Africa if the U.S. will maintain its leadership role. And the response wasn't that great, I'll be honest. It was kind of mixed. Most of the Silicon Valley folks were not even investing in San Francisco, let alone in Africa. So they were like, yeah, that's awesome, but let me know when, in a couple of years. And now, we sit here talking about the acquisition that just recently happened by Paystack, by Stripe, is a kind of a testament of all the great work that a lot of folks have made to this day. And out of that work, we now have a new initiative called Startups. Essentially, it's a natural extension of the Lions Africa work, but it is a much more global in focus. And we're essentially merely focused on accelerators and kind of ecosystem builders to kind of exchange ideas and collaborate together to kind of bring prosperity around the world. And this partnership, obviously, we are thrilled to collaborate with Michael, YC, and Techstars, and other big global leaders in the space. And as you know, Y Combinator has supported incredible startups I can't even name them. All these great brands that came out have been kind of YC's portfolio. And I'm really thrilled that one of them is Anthony here from Verto is joining us. So this is going to be an interesting, intimate conversation not only between YC and one of their portfolio companies, but for us also, we're talking to two folks that we're collaborating with Michael on startups and with Anthony. He was actually one of our Demo Africa alumni because I met him in Casablanca about 2-3 years ago at Demo Africa. That was his first pitch. And I had the honor of being a judge in Casablanca. And I don't know if Anthony remembers this, but I made a prediction on the stage saying, I'm an economist and I know a lot about microeconomics and what they're trying to address on foreign and hard currency and foreign exchange issues. And I say, these guys going to be Africa's unicorn. This is not an African problem. This is a global problem. And so to see Paystack being successful in terms of being acquired by the American company Stripe, and I'm right now again double downing my prediction, my foresight, why Anthony's firm is going to be the next one. So I'm thrilled that both of them have joined me in this thing, and I'm not. This is where I stop talking, and obviously I'm honored to have Michael Siebel, who's the CEO and partner at Y Combinator, and Anthony Aduole, who's the co-founder of VertoFX. And so I'm going to start this with Michael. If both of you, if you can take a brief time to kind of introduce yourself and kind of talk about why you matter for this conversation, what it means for you in terms of being in the kind of the Africa ecosystem, and then we'll go into our Q&A.
Great. I'll be really fast. So my name is Michael Seibel. I work at Y Combinator, and at YC, a couple of the core tenets of YC has been, first, to support founders who are using software to make massive changes in the world, and second, to not require those founders to know how to fundraise, to have an open application process that anyone can participate in. Nowadays, around 30 to 45% of the companies that we fund, feedback there. Okay. Around 30 to 45% of the companies that we fund are international, every single batch. And we have funded, it looks like 39 companies in Africa in the last 5 years. And I expect that trend to continue. So I'm just happy to be here and talk to all of you.
Thanks, Thomas. Awesome introduction, by the way. Honestly, back to 2018, when obviously I met with Thomas in Morocco, Casablanca. Verto, we just at the early stage of what we're trying to do, which was basically to make it easier for businesses to pay out of the country. So effectively, we just want to do payments across border. Fast forward to 2 years or 3 years later, now what we're trying to do is to actually building a tech infrastructure that enable instant cross-border payments. And what does that really mean is that the same reason why an individual can send money using Cash App or any of the other instant payment solution out there today, the same solution that we want to provide for businesses, because businesses are pretty much employing every single person in the world. When you talk about the SMEs, businesses, about 87% of GDP actually come from them, but yet none of them actually have an effective solution when it comes to making payment. So Verto, what are we doing? We basically are making it easier for businesses, mostly in the emerging market, to gain access to foreign currencies, make cross-border payments with a unique tech platform that just make life easier. And yeah, that's pretty much what we do. I'm sure we go into a bit more details as we go on. Thank you.
Awesome. One of our panelists was going to be Shola from Paystack. Unfortunately, he had an unexpected trip, so he wasn't able to join us. So I was going to start up with him to kind of talk about this big news that came out. And so in light of his not being here, I'm going to have Michael kind of channel his energy since they are one of his portfolio companies. So if you could walk us through in terms of kind of Paystack's journey, so to speak, from YC to this acquisition, so people can have kind of a context of what does the value chain look like for an African startup to join the global, kind of grid, so to speak, through via YC and how they were able to kind of get this acquisition from Stripe.
So I can't give too much of an insider story because I don't know all the details, but I'll start by saying that, Paystack applied to YC twice, actually. And actually, I believe Shola originally applied to YC even before he was working on Paystack for another idea. So for Shola, it might have been his third application. So for any of you out there who have not gotten in the first time, understand Paystack didn't either. The thing that really impressed us about them, Shola and Ezra, they were both software engineers. They didn't give up and change their idea between their first and second application. And they even convinced banks to let them build software for the bank so that they can integrate with the bank and start building a payment provider. And so that was enough to get them an interview. In the interview, I remember distinctly asking, what is the problem? Like, I'd never been to Nigeria. I didn't understand why it was hard to process a credit card or a debit card online. They actually walked me through a popular website that was using another, at the time, far more popular payment provider. And that was enough to convince me there was a problem. It was a multi-step process. You had to get text message and it didn't work. And oh my God, it was painful. And so, working with them during YC was amazing. They were developers building a developer tool. And so that was just a joy. I remember after YC, we had a conversation about where they should live. And, we were discussing the pros and cons of basically being in Lagos. And having never been to Lagos, I didn't understand why this would even be a choice. Like, of course, you go back to Lagos. That's, where your users are. But for them, they had gotten so much work done being out in Silicon Valley that it was a question for a little while. But pretty quickly they realized, hey, we can't be this far away from our users if we're going to build a successful company. And so they went to Lagos and they started growing. And it was really impressive to watch. I skipped over their demo day. They also had a good demo day. We were actually nervous about their demo day. It was one of the first African companies we had funded, and we didn't know whether U.S. investors would be willing to invest at all. And they were able to raise $1 million on demo day, which goes a long way in Lagos. And so that was a really great start for them. Fast forward a little bit, they invited me along with Maya from Ingressive to come visit Lagos. And that was the first time I was there in person. I spent a week in Lagos and I think about 3 days in Abuja. And that really opened my eyes to everything. It opened my eyes to the potential of Nigeria. It opened my eyes to just information about Nigeria. Part of what I need to do to get companies in Africa funded is tell a story about the region and why it's growing. And before going there, it was a harder story to tell. But after being there, it was pretty clear what was happening. It was pretty clear that, Nigeria was like an amazingly dynamic place and could support amazing startups. And so, we met a lot of startups there. We met a lot of investors, met a lot of kind of people in the ecosystem. And that trip alone probably translated to 15 investments over the following 3 or 4 years. And so, I don't want to go into too many details about Shola's Series A, but what was interesting about Paystack was that Stripe, another YC company, did their Series A. And, Stripe is interested in becoming a global payments provider. And I think that they understood how amazing of a product Paystack had built. And so they wanted to support them on their efforts. And that was a great deal. It was great to see one YC company fund another YC company. We always like that. Needless to say, Stripe kept a close eye and, decided, I guess that was a couple years later, to buy them. And so, for me, a little bittersweet, to be honest. And I told Shola this, I think Paystack was doing amazingly well. I think Stripe could have probably waited a little while. But I think it's an amazing outcome for the ecosystem, for the founders. I think Stripe's going to continue to invest a lot of money into the ecosystem, which is going to be great. And Fundraising is hard. And, one of the really good perks of being acquired is that you don't have to pitch VCs anymore, which, I don't know if VCs realize this, but it's kind of one of the worst parts of the job of being a founder. So that's the story. And we're all really proud. We think that Shola and Ezra and the whole entire Paystack team did an amazing job.
Beautiful story. Yes, it is. So on that note, let me, and I'll have commentary on that, but let me let Anthony maybe talk about, obviously you have your own journey from Casablanca to now, but I'd love to see how did you feel to see another Nigerian startup have this kind of journey and get to where they are right now, and what does that mean to you in a sense, to your own future, and also to the kind of the ecosystem? Go ahead.
Yeah, absolutely. I think it's probably one of the best news that can come out of what's been happening this year, because we have COVID going on, and obviously almost every digital payment solution providers out there have been doing really well this year. My journey with Paystack, or my kind of like interaction with Paystack, actually started in, I think, 2016, after they announced their seed round. At the same time, I was basically quitting my job to start entrepreneurship, was going to do my MBA. And then I saw the news like, Paystack, Nigerian company, raise money in Silicon Valley. It's like, oh, okay, that's new. So, but in a way, it kind of gave you that inspiration that obviously I live in the UK, I'm based in the UK, but I'm trying to solve the same problem. At that point, myself, my co-founder, we're still very early stage. It was just discussion on what we're trying to do. But given that information and given that news, it was so nice to be inspired by another company doing well. And fast forward to, I think that month in September, when we came to Morocco for Demo Africa, obviously we came out, you had your, some feedback that obviously I had a few one-on-one, and you were obviously further excited about how we're solving the problem. Then on my way to London, I got email from YC about our interview, which was basically skipped to face-to-face. And I was like, what's going on? Speak to my cover and all that. I was like, oh, dude, we need to get ready because we cannot mess up this opportunity. And just to put out there, that was our second application. The first one was literally 3 months before that. Like, we're trying to get into the summer batch of 2018, but probably minimal traction and so on. Anyway, I go back to London, myself and Ola, we sat down and we start thinking, what are the YC people we need to contact? And guess what? Shola was one of those people. And we, like, he actually gave us about an hour plus of his time, about 2 sections of pure Q&A, then saying, hey guys, you look like you're doing okay, but this is not good, this is great. And honestly, just to see, and that's what YC gives overall. So obviously YC invests, but outside just the investment is that community where every single person wants to help everyone else's, because if you're successful, it's almost guaranteed that everyone's successful because we tap into each other, whether through solutions or becoming clients or another YC. So that was great. Obviously, we went to YC, had the interview, one of the probably worst experience of my life. I had to wait like 40 hours or so to get the feedback. But luckily, I have to move to Silicon Valley for the next few months. Now, where I see the impact of maybe Stripe acquiring a company like Paystack compared to Verto is that, excuse me. So the way I look at Stripe, they're trying to basically become like, or creating ecosystem on the internet through payment, like by increasing the GDP and so on. And Paystack is pretty much doing the same thing on the continent in Africa. Now, for someone like Verto, we're trying to say that we're not trying to increase the GDP of internet. We actually want to increase GDP of that continent of Africa, because today there's so many fragmented solutions or lack of real solutions and infrastructures. And that is obviously affecting the growth of that economy, of that country or the continent. And if you have a company like Paystack or our company where we're trying to make it a lot easier for these businesses to access any solutions that is not easily accessible through a quick login or whatever, that's going to make massive change to the economy, because now you get these businesses doing well, employing more people, and obviously growing, and that give back to the continent. So yeah, it's absolutely great news. Hopefully there'll be more African startups. I'm sure there'll be more YC startups that are going to be getting taken over or acquired, or hopefully maybe IPOing as well in the next few years. Michael will be happy if in 2 years' time, 10 YC companies in IPO. in Africa. That would be great news. So
That would be great.
That's a beautiful dream. That's a beautiful dream. Let me just go back to what Michael earlier mentioned about seeing is believing, right? Like I think you going in person, looking at Nigeria and all that, changed everything for you in terms of even your own appetite to invest, right? And we saw this earlier on. One of the key issues that we were working on as an office was how do you increase the credibility of the continent as a place for investment, as a place for startups can come in. And we kept hitting this kind of perception problem, right? And that perception is not something that you could just kind of, be able to kind of dispel and move on. And how do you, obviously we can't force everybody to go see the opportunity for them to do that. That's one thing, especially now with the pandemic and people's appetite to travel has become even more limited. And I remember in ours, we were trying to even fund a travel show called Silicon Safari, where we were trying to take one of these American investors and go look at the kind of opportunities in Africa and all that. This is all kind of our drive to make sure that the continent gets the attention. But I'm wondering from an investor perspective for you, Michael, aside from them being part of a YC company, and that's a very rare thing to have. That's like getting to Harvard, so to speak. But what do you recommend the continent does in increasing its credibility so the flow of investors can actually come in and the ecosystem could be even deepened more?
Well, it's hard to speak to the continent, but I'll speak to founders. Okay. The first thing that I think is really important to communicate is that no single country in sub-Saharan Africa or in Africa total is big enough to support a massive company. And so when you're pitching your company, you have to understand that. So you have to start very early with the mentality of no matter which country you're starting in, you want to be covering at least the sub-Saharan continent. And you have to be able to set that up in your pitch. If an investor believes you're only looking to build a product for your country, it's going to be a lot harder to convince them to invest. So I think that's the first thing. I think the second thing is that there's a lot of geographical pride, and I see this all over the world. We fund companies all over the world, but there are also our hubs, and in certain hubs you get access to more opportunities. And so what I would tell you as well as a founder is you get to choose where you work. Choose carefully. There are some. It's already hard enough to make a successful startups. There are some geographies where you'll have more advantages. There's some geographies where you'll have fewer advantages. And so please make sure that you are putting yourself in a place, you're kind of planting your startup in a field that is primed to grow. And then the last thing I'll say is don't give up. You're going to get a lot of no's. Like, if you're going to build $1 billion company, you're going to get a lot of no's. If you can't handle no's, then you shouldn't get into this game. If you expect 100 no's, if you expect 1,000 no's, then you won't be disappointed. And so much about fundraising is expectation setting and your kind of emotional state. If you can come into a meeting confident, even after you got 100 no's, you're giving yourself an amazing chance on the 101st pitch. If after the first 5 no's, you beat yourself up and you say your company sucks or investors suck or the world sucks, it doesn't matter what you say in your pitch because that's what the investor receives. And nobody wants to invest in a founder who thinks that way. So yeah, like, startups are like getting punched in the face every single day and waking up and doing it again. Understand that you're probably starting a journey where it's like getting punched in the face twice a day. But hey, like once you're getting punched in the face once a day, what's another punch in the face? That's what I'd say. So that'd be my best advice.
I love it. I love it. Concussions are all. I mean, startups are walking around with a lot of concussions. So it's like being in the football league anyways. Yep. Anthony, what's your thoughts on that? Like what, I mean, obviously you live this dilemma, so to speak, but you've been able to crack the perception issue and got into YC and getting investors and all that. What's your insight on that?
Yeah, I mean, there's one point that Michael just said, which is around like get punched in the face but keep going, because if you, especially today in Africa, a lot of, I would say, investors do not understand the nuances of the problem itself. And now that nuances is what a lot of people are trying to solve. But when you come to investment, like you want to actually almost lift it up to say, hey, this is how big the problem is when it comes to maybe the impact on the GDP or the impact of that solution on the continent, in your country, whatever that is, right? So early stage for us, when we started solving this cross-border payment problem, we focus on Nigeria as the starting point. And because of that, when we talk to investors, they're like, so this is a very small problem because you only solve in one country, or the GDP, how much is really the transaction going through? And it's our job, obviously, early stage, it's almost like, oh no, they don't get it. But for us, we have to learn to understand that we need to kind of come out of that silo thinking of, hey, we're solving a Nigerian problem because it's a global problem. Now, when you look at payments in general, almost everything you do, there's a payment involved, right? Now, which part of that payment are we solving? And we're like, let's focus on the cross-border aspect of payment. Cross-border aspect of payment is so big, you can't just say you're solving that. Now, which part are we solving? The business side. Now, business is so big, like there's so many transactions going on through big banks, big corporates. We're not really gonna go to a big, FTSE 100 or any of those big tech companies and say, we're gonna be doing your payment tomorrow, because you have to get to a point for you to do that. So we focus on the SME side. Now, SME cross-border payment is looking clearer, but then again, we're not gonna solve all the SME problem in the world. So if you don't go back to the African SMEs, you start to see that the number is bigger than solving a payment problem in Nigeria. And when we start pitching from that point of view, the investor understand that, because now I can say to an investor that the emerging payment or cross-border payment revenue in the last 3 years is actually more than in the mature market. And I can show data that every transaction that's happening, because the solution is so fragmented that the unit economics is so great. So if you're any founder trying to solve that problem, by you doing the analysis to the level that even you understand the problem a bit more, it's a lot easier to convince an investor. And I think, yeah, I mean, you're gonna get maybe 100 no's anyway, even after that, but you're 101, potentially like YT will give you money, and yeah, we'll take it from there.
So let's, as they say in the rap game, let's keep it real here for a second. We're obviously during a pandemic, and the pandemic has disrupted the entire world, and most likely even more deeper in some of these emerging markets. But as they also say, a crisis is a terrible thing to waste. Within those contexts, like, where do you see, this is for you, Michael, where do you see this pandemic, at least in the recruitment process, in terms of your selection process, in terms of even the type of problems that these startups need to be solving with this, post-pandemic issues that we're going to be facing? Where do you see that happening? And that's one of the global context from your mindset, and also what does this mean to markets like Africa when this might have in kind of an unbalanced, impact or effects on those kind of markets? And same question for you, Anthony, in terms of where do you see your business model being impacted by the pandemic? Go ahead, Michael.
So I think that there are 2, maybe 3 very large silver linings for founders in Africa right now when it comes to COVID. The first is that the entire startup investment community has learned to make investments over Zoom. And so, at least for this window, you don't have to be here in person, which is a massive advantage, I would say. The second one, which is a little bit more complex, is that COVID in general is a technology accelerator, and specifically has opened up a new set of problems for people and a bunch of unallocated time for people. People have had to stop doing activities that they normally do, and they've had to stop using solutions and products they normally do because of the risks of COVID. And so I think that creates a huge amount of opportunity for startups. I think that when we look back on COVID 25 years from now, we will probably say it was one of the single biggest accelerators of technology adoption we've seen in decades. So I think it creates a massive amount of opportunity.
Great. Anthony.
Yes, I think for me, I think this pandemic or this COVID-19, what it's actually done is accelerated that innovation cycle that maybe usually take a lot longer for a new product to be adopted. So when you're talking about a solution that potentially solving a big problem, usually you have to go through trying to find your super, delicate or people that really have no option than to use your solution, right? Fast forward to the last, I think, 6 months, any solution providers out there that is online, that can literally do everything online, pandemic actually haven't affected us at all. If anything, it's actually showing the reason why we are in this space already. And I think there's a lot of news in the last 6 months that you would have seen about different startups doing really well and solving real problem. Because in the past, maybe 9 months ago, every of those problems that we're solving, we have to almost go back and talk about how the incumbents are solving the problem, because people will say, hey, but this guy have the market share, they're the one doing it, because people have to, for example, in our case, maybe physically go to a bank to sign a check and make a payment and sit in front of their account manager, have a chit chat and everything just to do one thing that they can do 2 minutes online. But because of the pandemic, they don't even have to think anymore because that option is not available. So yeah, I would say any startup that's trying to do the same, whether post-pandemic or not, it's always like try to position yourself for the future, because the future is not going to be continuously be online anymore. But that combination of anything that's waste of time doesn't have to be physical, like paying money to somebody when you can do it within a few seconds. You don't need to go to a branch or to collect payments in cash. You don't need to. You can pay to your mobile phone, wallet transactions. There's so many solutions out there today that just making life of any consumers a lot easier. So I think, yeah, pandemic hasn't really affected, luckily for people like us. But anyone in the, like, obviously get affected, I would say, if that's the case, they just need to find a way to readjust, reposition themselves, and maybe change their strategy, because we're not going to go back to where we were 9 months ago. Right? It's a new future. So yeah.
Awesome. So we're getting a couple of questions from the group. So the first one is Amir Abualeli. Where do you see, this is probably for Michael, it's a Paystack question. So where do you see Paystack going horizontally toward integration with B2B and distribution companies around Africa, or any SMEs to be more general?
That's a question you have to ask Shola.
That's true. He's not here, unfortunately.
Yeah. My only answer is that I think that Shola and Ezra have probably done less than 5% of their vision for Paystack. I think that they're in this for the long haul, and there's a lot more work to do.
Awesome. So the second question is from Zacharias, who's a co-organizer and a partner of ours. He asks a very, very solid question. In risk and return balance, how detailed due diligence does Y Combinator does to African startups, given obviously most investors are deterred with costly due diligence, and what level of risk is acceptable? So it's a question of, in your typical due diligence that you do in these African companies, since they are not, they're not in the Valley, they're not in the US, and there's information asymmetry and things like that. What kind of risk is acceptable for you guys investing?
Yeah, I honestly, I don't perceive there being significant difference in risk between funding African startups and US startups. We fund early stage startups. The expected outcome is death. So it's not like we're doing, private equity deals and putting in, $100 million into companies. And so it's interesting when we do due diligence, usually it's just to verify a fact that is the deciding fact on investing in the company. So if we invest in the company, if one of the reasons why we're investing in the company is because they have an LOI with some organization, we'll ask for that LOI. If one of the reasons why we invest in the company is because they have a certain amount of revenue, we'll ask for proof they have that revenue. But otherwise, to be honest, yeah, I don't see many due diligence differences at all. And to be clear, we're not a normal VC fund, right? We read an application, we do an interview for 10 minutes, we make a decision in the following 3 minutes and let the founders know usually by the end of the day. So we don't have that kind of 30-day typical VC fund process.
That's beautiful. Anthony, any insights on that in terms of at least the due diligence that was done on you in a sense of some of the investors you've got?
Yeah, I think for super early stage, I think for most startup, you are lucky in the sense that you don't need to show a lot of evidence of what you're trying to solve. Mostly it's combination of narrative and what have you done today. So with YC, obviously, we have to show traction that we're not just talking about an idea in our head and you expect someone else to come and solve the problem for you. And one of the things that I think Michael can definitely attest to this, where they say a lot of YC is that you do things that don't scale. So even before you get that money, you are continuously doing stuff to show that you are improving. So your yesterday is not the same as today. And when you show that to, I think, smart VCs, assuming they want to invest into your sector, assuming they are super early stage investors and so on, the chances that they will understand that problem and they will give you money based on your progress today. So yeah, I don't think it's not about risk per se, because every investment is about how many X's can I come out of it. Is it 10X or 100X? If it's just gonna be a 2X, like I will keep my money and I will give someone else that will give me 100X. So yeah, a lot of startups maybe don't get investment, not because it's not a great idea or great product. It's just that it's not a great exit for the VC. So yeah,
that's great. So let's take the conversation a little beyond fintech in that sense. And I list you, Anthony, and I'm going to ask the follow-up question to Michael on the same thing. What are the kind? And you said earlier, obviously, when you got into YC, the first folks you called were Shola because you know he went through that process. What are the kind of the early stage startups that are coming to you now?
Yeah.
Asking you a question. What are you excited about? It doesn't have to be, technically a fintech, but any other startups that are coming to you. What's exciting you right now?
Actually, it's funny enough that I remember after we finished YC and we announced our round, I was getting a lot of email requests, even from LinkedIn, for people that I don't know. And you would expect maybe a lot of them will be an African startup or founders. But funny enough, a lot of them are actually European and South America, because as guys, what they see is, hey, you guys are trying to solve a problem in Africa from Europe and US and so on. They want to do the same thing because they're an international company, and they see the experience that we gain from YC as something that might be valuable. So when the startups that I've been getting, usually they're not even within my space, which is good sometimes because you probably don't want to advise someone that is doing exactly the same thing as you and trying to solve the same problem. But I actually, there's about 3 or 4 startups that got into YC last round that I remember taking time to even let them do the application, because for me, it's giving back straight away. And more importantly is giving back to somebody that's trying to solve a bigger problem. So it's not just to them. Like if they solve that problem, there's a direct impact to whomever or the economies or the person that they're solving the problem for. So yeah, the kind of a startup that I've been saying, they're not usually in the kind of problem you think. So a lot of them are marketplace startup, trying to find a solution. A lot of them are a startup that have like a 2-sided solution. So they have either a buyer and seller, or someone have to be in the middle of their solution, and that's them. And so they're creating value on both sides. And that's usually one of the most difficult one, because you have to convince two sides to get your solution and probably buy your problems and solution at the same time, ensure that you are making money from it, because otherwise people will use your solution for free. When it comes to paying, you start getting different conversations. So yeah, that's kind of the type of startup that I've been getting that come to us, usually from different things that you don't expect.
Michael, I mean, obviously you said you had 39 investments in Africa. What's the early stage stuff that you're seeing that are either applying to YC or other places that's kind of exciting you coming out of Africa?
You know, that's a tricky question for me to answer for a couple reasons. One, we see a wide variety of startups coming out of Africa. I would say that, probably across almost every category, but certainly leaning more towards B2B and more towards fintech. I think the reason why things tend to lean towards B2B and towards fintech is because those industries tend to be more protected from global players. And I think one of the things that every founder should consider when thinking about the problem they want to solve is what special advantage they have over everyone else to solve that problem. And there are some spaces where the global competitors have massive advantages, and there's some spaces where the global competitors almost look backwards, like almost just like it doesn't look like they've been, they look silly, I would say. I might look at those opportunities. But then I think more in general, what I'm seeing that I like is I think that, earlier in the cycle, we saw a lot more applications that were driven by Silicon Valley hype. So like something would be in a hype cycle here, and then we'd see a lot of applications from all over the world, but Africa included, on that kind of fake thing, like whether it was chatbots or ML or whatever the thing of the day was. Mm-hmm. And I think that as more companies are getting funded in Africa, that's reducing. Like we're seeing more people going after real problems, not just like the buzzy things you can read on Twitter and TechCrunch and stuff. So we really like that trend.
I love it. I love it. There is a follow-up question for you, Michael, by Margaret O'Connor. It's following up to the Michael's 5% comment on Paystack. How do you ensure sweeping vision of founder doesn't overwhelm or confuse the market and employees as they move across development roadmap?
Oftentimes big visions are not very complicated. And so I don't think they're very confusing. In the context of Paystack, it's very clear they want to enable every business to be able to send and receive payments easily. But, in the context of a much larger company, Amazon, I remember there's this famous Jeff Bezos quote where he's like, the three things our customers are always going to want is more selection, cheaper prices, and faster delivery. And it's like, if you work at Amazon and you're helping them do cheaper prices, more selection, or faster delivery, you're helping the mission of the company. It doesn't need to be more complicated than that.
Awesome. We have a question from actually a friend of mine in our office knows her very well, Eleni Garamadin, Dr. Eleni, who is, the conversation has been mostly about Nigeria, so I'm going to take it to the East, as they say. When the East is in the house, oh my God, it's danger. So her question is to you, Michael. How important is traction before applying to YC? Or is the product strength or problem scope, or what is more important?
Traction's really important. But I hate the term because people interpret it incorrectly. So I'll rephrase it. Your progress over time. Because I want to be very explicit. Progress could be revenue. It could be deals. It could be regulatory. It could be a lot of things. But when we look at what you've done over the period of time you've been working on your startup, does it impress us to the point of being scared? And I think that unfortunately what happens with a lot of startups is they get into this death trap of believing that they need money to do anything. So they basically spend a huge amount of time shopping their pitch deck and not doing anything else. And this is a death trap for all geos. Africa is not special in this. We see this a ton in America, where we'll see a company that's been around for a year, and you look at what they've done, and it's very clear they spent a year pitching investors. Well, the software revolution means that you can get a lot done with a lot less money now. And so we want to see what you're doing when you're under-resourced. And every company is graded on a sliding scale of how much time they've been working on their company. And that's why you can see us fund a company pre-launch that's been working for a month and see us reject a company 4 years in with $10,000 in MRR. Because after 4 years, if you're only making $10,000 a month, why are we confident that the next 4 years will be much different? And so I think people have to be really cognizant of the story they tell. Students get screwed up in this all the time, because in the traditional world, more experience is better. So sometimes people will basically be like, oh, I've been working on this for 5 years. When you figure out like 4 of those years they were in college and they weren't really working on it. Don't count that time. It's really important to kind of cast your story and like the amount of time you've been seriously working and what you've gotten done during that time. Awesome. And if you find yourself thinking, I can't make progress, usually that's because you're not building software. And so you should ask yourself, why aren't you building software? Why isn't your co-founder building software? Because, man, so much about building software is close to free. So yeah, that's
beautiful. Well done. And we're running out of time. So Anthony, I'm gonna. What's your kind of remarks on that and what just Michael just mentioned as kind of closing remark?
Yeah, I think I definitely agree with the idea of how Michael defined traction, because before I go into doing entrepreneurship full time, when you talk about traction, you just ready to say, hey, now I'm doing 1 million ARR, or I've got a recurring revenue that's coming from X amount of users. This is my unit economics, my LTV to CAC is this, all those big numbers that you always get to get when maybe a public company is going IPO. Like, you don't need that for a startup. Like, a startup is basically showing evidence of a real problem and a real solution. Now, once you have both, do you have a real customer? Because you can have both sides, but there's still no real customer for whatever reason, whether you're too early or it's just not the right market. So if you have those three in place, like even without money, there's a lot you can do. So for Virtual, for example, when we started Virtual, the first 8 months, even before we think of applying to YC, myself and Ola, we actually spent time building the infrastructure. So because we're trying to do payments, trying to do cross-border, what we didn't realize early stage is it's super regulated when it comes to payments. Now you want to do payments in jurisdiction where there might be restrictions and things like that. So you need to ensure that your regulatory policies, your regulatory frameworks and infrastructure is adequate. Otherwise, you cannot be successful. Now you're talking about, okay, I want to do payments. Simple things like even getting a corresponding relationship, getting partnership agreements, like locking in all this and maybe API in some of the solution. You don't need investment to do that. Yes, it might take you longer time. Maybe I can have like 10 developers working for 1 month, or I'm working for 10 months, right? The point is there will be progress. So I think, yes, I do agree that there's a lot you can do as a startup founder that you don't need money. And when you show that traction to what I would call your investor, because not every investor is your investor. When you show that traction, they will understand and they will get it. And I think that's where YC comes in. Yeah.
Beautiful, beautiful. So on that note, my closing remark is, yes, you do not need money to do amazing things that Michael and Anthony do. But if you're looking for money, I'm going to plug in here. We do have a $10 million fund between us, and it's co-managed by USAID and state. And in our case, we don't even take any equity. We'll give this money to you as a grant, as long as the partnership that you have or the thing that you're going to bring to us is trying to address the post-pandemic economic resiliency and economic recovery that needs to happen. And I know for a fact there's a lot of startups that are working on that. So if you have ideas like that, please be in touch with us, and we'd love to see your ideas and love to kind of fund them and support them. And my closing remarks is I'm gonna go back to what both Anthony and Michael talked about. And there is especially Michael talked about 25 years from now, what are we going to say about this pandemic and all that? And it is seen that kind of foresight is the most important. And there is one quote from John Legend's song. I forgot the name of the song that goes, "The future started yesterday, and we are already too late." And which is a very prolific thing to say. In that sense, is that the Africa's talk started yesterday. Its future and its growth, and some of you being part of that, but we're already kind of too late in terms of thinking about what will happen. And I hope this conversation has robustly kind of ignited people's interest to not only look at YC as an opportunity for them to invest in, but for those, if there are investors on the line, be like Michael, go see it. Seeing is believing. Look at what the opportunities are. You'll be awed and amazed. I have been awed and amazed. I've been around in the continent looking at these type of things, and I get awed every time that I see it. So on that note, my warm and deep gratitude for both to Michael, especially Michael, for getting up early in the morning to do this. And Anthony, thank you for your participation. And thank you for everybody attending this. And we appreciate you. I hope you find this conversation fruitful and productive. And on that note, thank you.
Thank you very much. Thank you.
All right, guys. Bye.
Cheers.
Thank you. Bye.